Hello there, welcome to another webinar recording. And today we have in the studio from Premia Partners, we have David Lai, CFA. He is the partner and co-chief investment officer. David Lai is the partner and co-chief investment officer of Premia Partners. Prior to Premia Partners, David was the executive director and responsible officer at China Asset Management Hong Kong, where he supervised the company's investment activities and led the build out of the company's ETF platform in Hong Kong, including launching the world's first cross border RQFII-based ETF with over 2 billion assets under managed. Before that, David has been a portfolio manager since 2002 at the Hang Seng Bank, Mirae Asset Global Investments, and Citic Securities International. David has demonstrated proven investment track record in both active and passive strategies, recognized by numerous industry awards. David holds a Bachelor of Business Administration degree in finance and a Master of Science degree in investment management from the Hong Kong University of Science and Technology. And as I mentioned earlier, he's a CFA charter holder. And David is in the studio and he's here to tell us why Taiwan, why now, and how do you unlock Taiwan's growth opportunities through ETFs? David, if you're all set to go, I see your slide is up, your camera is on. Without further ado, I hand the time over to you, David, please.
Thank you. Yes, I'm very excited to share the Taiwan market. Why is it the right timing to invest in Taiwan right now? So before that, just a very brief introduction of Premia Partners itself. Premia Partners is a leader in ETF solution. We offer one-stop shopping. Here, we provide solution covering equities, fixed income in the region, and also global market as well. So regarding the team, I'm the partner in Posiao. We have other partners and also working in the same field for decades. And we also have a very strong team of advisors and colleagues to support providing the investment strategy and solution to the investor globally. So for the Taiwan market, why do we think that it's the source of allocation alpha at this moment? So as you can see for this chart, the GDP has been steadily growing very well for Taiwan. In the past 10 years' time, it has been steadily edging up. If you look at the GDP per capita, the yellow line is right now is talking about 35,000 US dollar. This year, according to IMF, is set to take over Japan and Korea to be the number one in Asia. And then for 2024, the GDP forecast is continued to go well. We're talking about 3.7% this year up to the estimate of June. As the last time I checked, let's say the end of September, we are talking about 4%. This means most of the economists has been revising up their forecast for Taiwan GDP. From the beginning of this year, talking about 3.1%, now it's around 4%. At the same time, the inflation is in a very optimized, optimal mode. It's only about 2.2%. That means inflation is not a problem, but at the same time, the Taiwan market is offering very strong economic growth. For the industrial production and also export, you can also see from this chart, it has been a very strong turnaround. From the last year, we are seeing most of the time we're in a negative zone. But this year in 2024, since the beginning of this year, we're starting to see some positive growth, year-on-year growth. I think major driver is coming from the semiconductor. For the currency, it's also very important when investing in the Taiwan market, as most of them are denominated in Taiwanese dollar. In this chart, we compare the volatility of Taiwan dollar, renminbi, Korean won, Indonesia rupiah, Malaysia ringgit, and also Thai baht. Compare all the this kind of currency in this region in the past 10 years. You can see the thick deep blue line representing the Taiwanese dollar have been seeing the very low volatility in the past 10 years time. compared to most of the other currency, which is a very important element for investor investing in the in the market that may not be the same, having the same currency underlying. And then as you can see from the overall performance, let's say taking the overall regional MSCI Asia ex-Japan performance year to date, 1 year, 3 years, or since the 2017 return, indeed, most of the return, let's say for year to date, half of them is coming from Taiwan market. And if you continues to this 2017, about 1/3 of the performance is coming from Taiwanese market. That means it's a very strong performance and contributing to the regional equity performance. If you simply compare the Taiwanese market benchmark, let's say the bottom line, you can see the FTSE TWSE Taiwan 50 30% cap, year to date 23%, 1 year 38%, and 3 years 15, or even the since 2017 return, which is around 190, is much stronger than the regional benchmark performance. So we can see that the track record, Taiwanese market, the equity offering a very strong outperformance in the past. Another consideration for investor is to see whether the allocating Taiwan will help diversify the portfolio. As you can see here, it's very interesting. A lot of people will perceive that Taiwanese market is very tech-driven. When they invest, let's say, have a proportion kind of a investment in US, they may see that they are very high correlation. But indeed, it's not the case. If you look at the Taiwan, the index compared to S&P 500, the correlation is only like 0.57. That means having the Taiwanese exposure will also help diversify the overall portfolio and steady the portfolio performance. One element to look at is about the dividend return, because a lot of investors are also seeing it's part of the return profile. Other than the capital gain, dividend is also contributing to the return overall. Here it's very interesting. Even Taiwanese market is a very tech-driven market. It also offers a pretty decent dividend yield in the past. If you look at the past 10 years time, it's always as around like 3.5% kind of on average dividend paid out. So compared to the others like the top picks, the S&P 500 or NASDAQ, is offered the highest. And we also highlight particular one or two company here like UMC, which is the foundry, very tech-focused company. Indeed, it's offered a very high dividend yield at around like between 5 to 7%. The reason behind is that Taiwanese, the investor base, is a very aging kind of a distribution. So the demand for dividend income is also very high. So traditionally, the Taiwanese equity will offer a very decent kind of a dividend paid out. And then in terms of the foreign fund flow, in the past few years, past few months, we also seeing very steady fund flow favorable to the Taiwanese markets. Indeed, it's turned positive since the late 2023 and consistently staying at a pretty decent level in the past few months. That means foreign investors are also getting more interested in Taiwanese equities. For the overall Taiwan market, the positioning, I think, is getting very interesting at this moment. According to the IMD World Competitive Ranking, Taiwan ranked number 8 in the global stand. So in a few aspects, Taiwan is actually pretty high. Let's say on the right-hand side, you can see technological infrastructure, it ranked number 6. Scientific infrastructure ranked number 10. Management practice, number 5. Finance, number 6. Profitability and efficiency, number 9. Tax policy and government framework, also number 6. So it's a very highly developed kind of a infrastructure base to be very competitive, particularly in tech side for Taiwan. I think it's very useful to talk about the positioning of Taiwan in the global semiconductor supply chain. As everybody know that one of the major themes in Taiwan is equities, is semiconductors. So how do we see in a global context? So what kind of value that the Taiwan is offering to the supply chain at this moment? As you can see, how to read this chart is that, let's say, starting from the number one is the supply chain beginning, starting from the design and core IP kind of a phase that is mainly dominated by the US at this moment. And then the second phase will be the equipment side. There will be some European player, Japanese player, and also the US player as well. But on the third one, manufacturing will be dominated by Taiwan. So you can see that the Taiwan will then shifting the final product to the assembly and testing and packaging in ASEAN and mainland China. And the final will be some end product, consumer product assembly will be happening in China or Vietnam, and then selling back to the developed market, including like US or Europe and other markets. So that is the overall supply chain, and Taiwan right now is in the core space in the manufacturing side. Here is another way to look at the supply chain divided by different workflow, including design, electronic design, automation, equipment, raw material, fabless design, foundry, assembly, testing, and also packaging and IDM. So you can see that some of the Taiwanese companies are pretty strong. For example, in fabless design, we have the MediaTek, which is one of the leader in this space. And then the foundry will definitely be like TSMC and UMC. They are a very core player in the foundry space. And also one of the key themes, I think this year, particularly in the capital market, in the equity market, is about the artificial intelligence, AI. But how do we play through that theme is also important. For example, like for the whole supply chain, we are talking about the application on the user side, on the builder side, or the foundation model, or the infrastructure. At this moment, it's very hard to gauge which player will be winning in the application or the foundation model, because some of the company may be just in the startup model in a very early stage, or not even listed in the stock market. So even investors are very positive in this theme. They may not able to capture through the stock market. But instead, in the infrastructure space, the hardware company will be a very obvious the beneficial. So Taiwanese company, quite a lot of them are actually engaging in this kind of business and will be benefit from the AI themes. So here is a slide we are talking about how Taiwan has a very dominant position in the global foundry space. On the left-hand side, you can see that the advanced foundry capacity market shares, Taiwan right now has 2/3 of it, followed by 11% in South Korea and 10% in Taiwan. And then on the right-hand side, for the overall foundational foundry capacity market shares, Taiwan also have around half of them, 49%, followed by 26% in China and also 9% in South Korea. So you can see how dominating right now for China in the overall foundry capacity. For individual company, we are also seeing some leading names. We are also listed in the stock market. For example, like TSMC, ranked number 1 in the foundry with a revenue over 18 billion US dollar. And then the fourth one will be UMC. It also has a very sizable kind of market shares. And then number 8 and number 10 is also belonging to Taiwanese company. So out of 10 of them, 4 of them are from the Taiwan. In terms of the individual company market shares, TSMC has around 54% of the foundry market shares. So followed by the second one, Samsung, 17%, and then 7% will be UMC and the others player. But on the right-hand side, it's more interesting that for the leading edge market, which is more advanced market, TSMC has an 84% market share. And there's only 2 players at this moment. The second one will be the Samsung, 16%. If looking at different product type, the more like the mid end UMC and TSMC also has a very sizable market shares. Altogether has around 2/3. But if you look at the more high-end 5 nanometers kind of a space, TSMC will be the dominating one, over 84%. In terms of the roadmap of the Taiwanese company going global for the foundry, starting from 2016, we are seeing like TSMC and then the other UMC also starting, is that they are start building fab in other places out of Taiwan. For example, like in China, in Singapore, in Japan, in US, in Germany. So that's why we are seeing increasing exposure and also helping the client globally to make the supply chain easier and more efficient for them. So on the right-hand side, you can also see that from this year, 2024, and compared to the potentially 3 years later, 2027, also almost all of this Taiwanese company will expand their global footstep and increasing their capacity in the offshore space, including like China, US, Japan, Singapore, and other places. This is another way to look at the change in terms of the industry landscape. For example, in let's say 2 decades ago, 2003, 2002 kind of time, there are 26 number of players with the leading edge technology back then, and Taiwanese company only like 2 of them out of 26. But then let's say getting into 10 years later, a decade ago, 2012 or 2014, there are only 7 players left with the leading edge technology. Right now, at this moment, we are talking about 5 nanometer or 3 nanometer. There's only 2 players globally, TSMC and Samsung. So you can see that how the landscape has changed quite dramatically and getting more concentrated with the stronger player in the world. And right now, if you look at the 3 nanometer, it's only 1 player is able to do it. That is TSMC, the Taiwanese the company and the largest company in the Taiwanese stock market. For the overall barrier to entry is also getting pretty high. If you look at this chart, around like 1995, around 3 decades ago, when we're talking building a brand new fab, it's only take around like $2 billion US. But as time goes by, more technology involved and more operating costs in building this kind of fab. Right now, we're talking around 20 billion to build a new fab. That is 10 times bigger compared to 3 decades ago. That means also the barrier to entry this kind of technology, not even talking about the technology itself, talking about capital is also getting involved much higher amount of money or capital. That means not a lot of players can do that. For the upcoming capex, we are also seeing Taiwanese company has been also building more, not only necessarily in Taiwan itself, but also building more capacity, let's say in US, in Japan, in Europe, and other places. So that is getting more interesting for this Taiwanese company to expand globally. So right now we are talking the entry barrier is getting higher. On this chart, you can see that on the right-hand side for TSMC capex itself, in 2022 is talking about 40 billion itself. So last year is also another 40 billion. This year is at least 30 to 32 billion. So this means very intensive kind of a capex has to be made. Right now we are seeing that is building higher and higher entry barrier for the others player to come in, and that will be helping the Taiwanese company to strengthen their leading position in the semiconductor industry. Interestingly, the AI-driven we mentioned earlier about the application side, we are also seeing some of the company or the hardware makers are involving more AI technology into their product. I think probably Apple has announced this kind of things that in their new iPhone 16. So interestingly, if you look at that, just breaking down the phone itself, the most valuable component, including the core processor, 5G modem, Wi-Fi chips, and also the camera lens, are made in Taiwan by Taiwanese company, accounting for nearly 36% of the total material bill of each iPhone, according to the FT study. So this means if the more hardware are getting tapped into the AI technology, I think Taiwanese company will definitely be benefit from this kind of a strong wave. So out of the 188 supplier Apple disclosed in 2023, 151 has production facility in China and 41 have facility in Taiwan. And indeed, some of the facility in China are also belonging to the Taiwanese company, which they have been setting up a factory in the mainland China. So that is also seeing the potential benefit for the Apple product if they're having the AI application and also getting a stronger demand, then the Taiwanese company will be benefit from it. So this is a chart that is estimated by Gartner and also the HSBC. Potentially the AI equipped kind of a hardware, whether it's the PC or the smartphone, the penetration rate will gradually increasing from, let's say, less than 10% in the PC or 15% in the smartphone this year to around 35% in the PC and also smartphone in 2 years' time. So that means there is a very strong sort of like the replacement cycle for the AI-equipped hardware. Also, if we look at the global IT spending, it's also resuming growth in 2024, this year, and also 2025, after passing through the down cycle in the past 2 years' time. So you can see that in 22 and 23, we are seeing some negative kind of changes in the PC and notebook, and even server in 23. But in 24 and 25, we are seeing at least around 5% growth each year in all this kind of a segment, PC, notebook, and also server. So that means they will definitely benefiting the tech-based kind of a Taiwanese company. But we mentioned a lot about the technology side for Taiwan, but the overall Taiwanese the stock market, not only about TSMC or the tech, is indeed 65% in IT, but it also have some other sectors as well. For example, financial, 11%, 6% in industrial, 4% in material, 4% in consumer, and some of the others as well. So other than TSMC, we also have a very well-known company like UMC, Foxconn, CTBC, Delta Electronics, the MediaTek, Quanta, the Cathay Financial, and also ASE Group. So this slide, we just want to highlight that how popular of the Taiwanese company, particular for this chart, is a TSMC ADR. There's an ADR trading in the US market, so you can see that it continued to have a very strong premium at around like between 5 to 20% in the past few years' time. You can see how popular the foreigner investor like to invest in Taiwanese name like TSMC. Some of the concern why they're not buying directly, maybe some operational efficiency, some regulatory concern. But beside all these kind of things, you can see that that is the premium representing the how the foreign investor view the Taiwanese equities become more sort of like more favorable in the past few years' time. So that is the end of the first section about the Taiwanese market.
All right, David. Thank you so much for your sharing for part one. Before we let you go, before we end the session, and before I share my slides, can I just quickly ask, what are the top three takeaways for the audience watching part one?
Sure. The first one is that the macro environment, the underlying economy of Taiwan is very strong. So that is giving you a very a good support for the stock market to be benefit from it. And the second is that the Taiwanese market is benefit from the semiconductor and AI theme, which is very popular starting this year. And it's not a short-term theme. It will continue to stay here for the next probably 5 to 10 years. If not longer than that. And third is that the Taiwanese market is not only about tech, it's more than tech, but of course, tech is a big component. But other than that, there are also other like financial, consumer, or industrial will be benefit from the overall economic growth.
All right, thank you so much, David. Members of the audience, we'll have part two coming up very, very shortly. Do stay tuned for part two. And before we go, we just wanted to share two slides, which you'll be keen to take note of. We are giving away a free ebook. Okay, the best things in life are normally free, and this is one of it. So if you're looking to start your investment journey, scan the QR code to download our free ebook right now, and you could learn the necessary tips and tricks for getting your investment started. The next thing we would like to share is how do you trade ETFs? Well, you use the Phillip Nova 2.0 suite, of course. Okay, you can trade on desktop, your laptop, your mobile, and recently we added the platform. The platform has been enhanced for use on tablet as well, so you can trade the markets on the go on any of your devices. Simply scan a QR code on the screen right now to request a demo. All right, that wraps up our session for today. Stay tuned for part two. David will be back to give us more of his insights on the Taiwan market. Thank you so much, David, and thank you for tuning in.
Thank you.